Good morning, everyone. Once again, this is Black Forex coming to you with another pre-market analysis video. This morning, we're going to be looking at the USDCHF. But before we get down, start breaking down this Forex pair, we have to state that this video is for educational purposes only. This is not financial advice, but we all know why you're here. You're trying to find good, credible Forex content that can improve your ability as a trader and help put some money in your pocket. So with that being said, let's break down this Forex pair and see what we can do to help out with that. All right, so before we get to talk about the technical analysis, what's happening on the chart, we're going to talk about the USD and the CHF. As we stated in previous videos, that the USD is one of our weaker currencies heading into this trading week. This is due to the inflation that's hanging over the American economy. As long as that inflation is there, no matter how good any economic news that comes out in support of the USD, it is not going to be strong enough to push prices and to push USD into an area from weak to strong just due to the overall inflation that's hanging over it. The only way that's going to change is if if the American government starts to institute any type of economic policies to start to combat this inflation. But with the way this war is going on between Russia and the rippling effect of these sanctions, that's going to end up happening on our economy and the gas prices. I don't see that happening anytime soon. Okay. Then on the other side of the coin, the USD has acted as a safe haven, has acted as a non-traditional safe haven currency, which means that anytime the European conflict between Russia and Ukraine looks like it could spill over into a global conflict, it has started to gain immediate strength. So we have to watch out for that. We have to watch out for geopolitics also and take that into account while we're also trading. Okay. Now, the CHF, the Swiss franc, does its economy does have some inflation happen over it, but their country is kind of dealing with it a lot better than ours. But on the other hand, and on the other side of that, what's kind of nullifying that is that the overall European economy is destabilized due to fear, uncertainty, and doubt due to the European war between Russia and Ukraine. So the major three European currencies, which are CHF, Great British Pound, and the Euro, have all been precipitously weak, all related to the instability of the European economy related to the European war. Now, this also acts as a safe haven, as a traditional safe haven currency, and at any time that the European conflict can look like it may spill over from a European conflict into a global conflict, it will gain immediate strength. Okay, but fundamentally, it's one of our weaker currencies, but it's not our weaker currency. Okay, and it is stronger than the JPY and somewhat from a different time period of time that is stronger than the USD, as we can see here reflected on the chart, because we've been, ranging between 0.92889 and 0.91789 for some time, but we did have the break in the range. But if you compare this to the USD JPY chart, that break was not that aggressive. That's because the CHF is just much, much stronger than the JPY at this current time. Okay, so you will have somewhat breaks within the range from time to time. And basically, what happened was towards the latter part of towards about Wednesday and Thursday, heading into the trading week of last week, the CHF did start to drop and it did start to become much more weaker than the USD, which forced the price to go into a long position. But as you can see, we started to stall out around 0.93630. So this is a very strong possibility. We're just going to go back down within to the range. Okay, so we're in this area here and price is going to fall. Now, what may continue it into a long position, which is a possibility of that, is if that the CHF, for any particular reason, that war intensifies on the European continent, or there is some release of CHF economic news that is not good for economic indications for the future of the CHF in their distant future, we will have just a pathetic push up and will continue to go up into the long position. Okay, but if CHF regains its inherited strength it's been having over the last several trading weeks, price is just going to steadily drop, and then we'll just have an aggressive push back down into range. Okay. So or we could possibly start to range out in this area here before price starts to drop back down or price continues to go up. This is all going to be basically about how, not so much how USD is going to perform, more so how CHF is going to perform. If CHF continues to act much weaker than the USD, then what we will have is some retracement and we'll continue to go towards our long position. If the CHF starts to act as if it's stronger than the USD, then we'll see a gradual push down in price and possibly going backwards into our range area. It is all about how the strength of the CHE will present itself throughout this trading week. Okay? Hope that information was helpful for you guys. Happy trading.